All right, welcome back, mates. Crypto Leverage Trading Group about 8:30 Thursday evening. Hey, listen, I want to cover something really quickly for everybody. And we've talked about a lot of the observations on things we're going to see here coming up this weekend. But I wanted to recap January and February for everybody, like in terms of what reality, why. Sometimes you want to take a step back and look at why things happen the way they happened, why you were right in an observation, why you were wrong in an observation, right? And so that's always like a really, really good thing. You know what I mean? And it's plus and minuses. I always tell you guys, everybody, all crypto ballers should always have a notebook. You should always have notes. You should be taking notes every trading session. Market analysis from a macro perspective. You know, what's driving the market, on-chain metrics, technical analytics, what's happening. And one of the things we talked about, and we always were aware of, is our triangle formations, right? We always talk about rising wedges, ascending triangles, descending triangle formations, head and shoulder formations, right? And you basically make these determinations, and a lot of us will go ahead and take on, a lot of risk, okay, by entering into trades in the middle of formations and anticipation of a breakout up or a breakout down, right? I mean, that's just what leverage traders do. We're more riskier traders than the average person. So we're willing to take a little bit of early on before confirmation, right? Whereas you should wait for confirmation a lot of times. In terms of candle recognition, in terms of reading a lot of things that we do in the 1 minute. But we look at this bull flag that we talked about, right? The entire, January and this run up and into February, and we watched it form here, right? Now, obviously, we've all talked about bull flags and what they look like, and we can go into that further in candle recognition and technical analysis. We'll go through that in the course a little bit more in depth with members. But we all have a baseline understanding of what a bull flag looks like, right? And how we determine if we get this breakout, right? When we said here, we said 75%, just like a lot of the rising wedges, whether they be reversal patterns or bullish patterns on ascending triangles. We basically have stated the mantra that it's a 75% chance of confirmation above and a 25% chance we break down to the downside, right? And that's pretty much held pretty true since the fall for a lot of these formations, right? So we kind of knew in anticipation of a breakout from this bull flag. And again, this is the one day. Now, this is on the 1 day chart. Remember the macro. When we look at it at the end of the week and we look at the weeks that build, that contribute to the weekly candles, and also will contribute to the monthly candles. We're not looking at the 1 minute, the 3 minute, the 5 minute, the 15 minute, okay? That's a totally different scenario. We're looking at from a macro market analysis perspective on where the market may be. You don't use the 1 minute, 3 minute, 5 minute, 15 minute to determine where the market's going to be in a week, okay, or a month, right? You use the larger areas. So this is how we determine when in our group, we actually called 52,500 was really, which was conservative. We know that now. I got to 58, right? But 52.5 wasn't too conservative when Bitcoin was trading, at 32, right? Like right in here, okay? Wasn't that conservative a call? Ended up being, because we went to 58. But how we do that a lot of times is to protect and leverage trading, especially, 10 days, right? That's how we try to do it, is in 10 days. We didn't expect it to go 20,000 in 10 days, right? Okay, that's not what, but it gives us an idea of the direction of the market and where it's going. So, and basically that distance of that pole that you have, okay, in essence ends up flipping here up on top of whatever that confirmation candle is going to be, right? That pivot, I call it a pivot point. It's really not a pivot because it's not at a triangle or an apex, but I call it a pivot. And that's where you get that, right? And that's just a basic understanding of potentially where that break's going to be. And it basically took us above 55, between 55 and 60 on that particular candle. And that's how we knew, like 52 was still conservative. We got to 58, but it gave us an idea of, on the breakout, where we were going to be in February. And we'll do the same thing for March coming up.